What's up, everyone? It's Caddy with MoneyVest. So inflation numbers are scheduled for later this week, so on Wednesday and Thursday, and I will be live to cover those CPI numbers. Markets on the day were practically flat, didn't really do anything with the NASDAQ, S&P 500, and the Dow Jones not really going anywhere. I mean, the Dow was basically down 3 basis points, S&P down 4, and the NASDAQ here was up 3 basis points, but they were practically at the same price where they closed on Friday. So we got lots to unpack because the earnings season is just getting started. The treasury yields, the 10-year treasury yield is pushing higher to almost 4.5%. Not to mention, of course, inflation numbers are on deck for later this week as well. So it was kind of like a non-eventful day, but that's usually what happens prior to inflation numbers and the earnings season that's getting started as well. So hope you all enjoy this video and find it helpful. If you do, make sure to drop a like and subscribe to the channel if you haven't already. I would really appreciate that. And most importantly, the next couple of months, this is going to be a discounted tier for everybody who does join, and everybody who is an existing member will have access to the internal beta launch of the MoneyVest platform that we're going to have. So link's going to be down below if you want to join, of course, be a part of our launch here that we are going to be doing for all the members. You will get access, early access to the MoneyVest platform, the Pro platform, which will have the full suite of financial calculators and models and fundamental analysis, including macro analysis as well. So we are building this. It's been under development for the last 4 or 5 months, and I'm working with developers every single day. And it takes a lot of time, a lot of data, a lot of storage, a lot of things need to be completed in order for us to have that internal launch. But when it is, it's going to be available for all the members for the first couple of months to gather feedback, and then we will have a global launch in the summer of 2024. So again, link's going to be down below if you want to access the MoneyVest Pro platform in 2024. Early access for the first couple of months here. So moving forward, this right here, S&P 500 closes little changed on Monday as rising treasury yields weigh on stock prices. I do also want to mention that this right here, whoever joins, the pricing is going to be locked for you forever at a discounted rate. And then when we do have the global launch in summer, this pricing is no longer going to be available. It's going to be significantly higher because of all the data fees and the fees that we're paying to the NASDAQ and the New York Stock Exchange to get all the data. So treasury yields weigh on stocks as they continue to push higher. So if you come over to the 10-year yield, we're now sitting at 4.4%, which obviously is the same level as where we were back in November of 2023 before this rally basically started. And right now, it doesn't seem or feel like it's putting a lot of impact on the overall equities market, but eventually it will. If it continues to go higher, if the yields, let's say, trade back up to 4.6, 4.7, 4.8 to as much as 4.9%, they are going to sooner or later put a greater impact on the market, on equities more specifically. So very, very flat day, as I mentioned earlier, but coming quarters will see higher inflation. This was from Apollo chief economist Torsten Slok. The recent data supporting a recovery in manufacturing activity is a signs of life. Inflation are some of the factors pointing to an impending market slowdown, according to Torsten Slok. And the repricing of rates, I think, is very important because it was telling you that we've been waiting for the slowdown for so long. Why isn't everyone expecting this rate slowdown to come in the next several quarters? In particular, with the tailwind of the stock market up $10 trillion since November FOMC meeting, we have a dramatic tailwind on consumption, and CapEx over the coming quarters will continue to support inflation to the upside. And he is correct. I mean, $10 trillion is what we have seen in terms of the global increase in wealth in the U.S. stock market since FOMC, and that is a pretty significant number. I broke this down in another video talking about how this has been one of the strongest bull markets in the history, as we haven't really seen a drawdown of more than 1.7% for the S&P 500, not to mention a $10 trillion increase since November FOMC. Bar neither high nor low for upcoming earnings season. So earnings season is set to begin on Friday with the big banks reporting first before the market opens. And again, this is going to be for the first quarter 24. Very, very important numbers, which is really what's going to determine and dictate where the markets go in 2024. And financial chief economist Jeffrey says the upcoming earnings season will seem quite similar to the fourth in terms of growth and drivers, with mega cap technology leading the way. Magnificent Seven to post a year-over-year earnings growth of nearly 40%. And I showed you that other graph in one of my other videos where Magnificent Seven is set to outperform from an earnings growth standpoint every quarter of this year, except for the fourth quarter of 2024. So it's the last quarter when XMAX 7 is actually going to do better than the Magnificent 7 itself. The rest of the S&P 500 493 will need to deliver some healthy upside just to match the earnings, but that's going to quickly change as we approach the fourth quarter of 2024 and year-over-year comparables become more difficult to beat for Magnificent 7 and big tech companies. So this right here is how the markets ended up. So Google here up 1.4, Meta here down 1.5, Apple here down 67 basis points, Nvidia down almost 1%. Tesla, after the robotaxi announcement, is up almost 5%, so pretty strong day for Tesla here. Microsoft slightly down. We did have a lot of pullbacks in consumer defensives and healthcare, and more specifically energy. Basic materials was mostly flat. Real estate pushing higher. Utilities pushing higher. Industrials were mostly flat. And then, of course, we did have some consumer software, application, financials pushing higher as well. So of all the sectors, basically, most sectors were green with the exception of course, technology, healthcare, and energy pulling back here on the day. Last 1 week has been a little bit more mixed, energy leading the way. And the last 1 month also, energy leading the way as oil prices have continued to rally higher to now over $84, $85 a barrel. This right here is going to be the futures and the commodities. So platinum prices, palladium, ethanol, live cattle, Nikkei, gold pushing higher. Gold is actually doing really well. So it's really important for us to start looking into that as well. I've been buying gold for the last 2 years. Not every month, but I've been kind of allocating a little bit of capital in gold. And I actually did a couple of videos on how gold could be getting started with a potential 10-year rally here on a comparable basis when you compare that to, let's say, the S&P 500 or even the equities and the fixed income market. So that is something to keep in mind as it's hitting a new all-time high. Wheat prices, coffee prices, lumber prices, orange juice, and sugar pulling back, with Bitcoin here just over 71,000 at the moment. And of course, we do have Ether just under 3,700 as well. So when it comes to the forward 12-month PE ratio for S&P 500, which is sitting at just over 20, that is above the 5-year average of 19 and the 10-year average of 17.7. So we are certainly trading at a valuation which is not cheap by any means, and that's exactly my whole idea. Because when I ask you the question, is the markets overvalued, right? A lot of people can have disagreements that no, the markets are not overvalued. Or some people would say the markets are indeed overvalued at these valuations. There can be, opposing views. But if I switch the question and I ask you, is the markets undervalued? I don't think majority of people would make the case for... I think majority of the case would make the case, people would make the case for the fact that the markets are not undervalued, right? I think very few people would argue the markets are undervalued at these prices, which is, again, not the same as arguing for the fact that markets are not overvalued. So there is a difference here. So even though, let's say that you are not a believer the markets are overvalued and you believe that there's potential to the upside, by no means I would consider this market to be undervalued and an opportunity to start buying aggressively. Sure, we've seen some pullbacks, but the last big buying opportunity basically came in October and November of 2023. And that right there was that pullback when you saw the valuations compress, when you saw the technicals come down, we got down to oversold levels, volatility was high, market breadth was oversold. So there's a lot of indicators that we look at to identify serious buying opportunities from a risk reward standpoint. And right now, we're not there yet. So coming over to crude oil first, talking a little bit about crude oil trading at just over $86 a barrel, continues to move higher. So this right here has been the entire rally for crude oil since the beginning of this year. It's up a little bit over 25%. And the next resistance and target is going to be sitting roughly at $93. So this right here is going to be that level to keep in mind for crude oil, with a support level that's going to stay put at $80, $81 a barrel, down to as low as $70, $73 a barrel for crude oil as well. So those right there are going to be a couple levels to keep in mind for crude. As it continues to move higher, of course, it's going to put more and more pressure on equities. This right here is going to be volatility, so coming back down a little bit over 5%. So this right here inside this red rectangle is going to be a level to keep in mind, of course, and we've talked about how 18 to 20 to as much as 35 to 36, 40 levels are going to be super important from a buying perspective and a buying analysis standpoint, because the higher the volatility goes, the more attractive the valuation and the pricing and the market risk reward becomes. And that's exactly what I'm waiting for patiently, for the prices to come to us and for the VIX to be higher. Ether here pushing back up over to 36.90, so very nice recovery back up to the upside. So trading just back above this resistance. Actually, this is going to be that level to keep in mind, which is now going to turn into a support since we are trading above that level for Ether. And Bitcoin here recovered really well back over 71,000. Still consolidating sideways very much inside this red rectangle here. And again, of course, if we do get a breakout, then $73,000, $74,000 is going to be that resistance. And then, of course, we got a new all-time high on Bitcoin as well. Talking over to the S&P 500, so SPX, very, very flat day. We briefly broke down from that 21 EMA last week, but we quickly recovered back up, and this right here is going to be that support level to keep in mind for S&P. So we'll see if that level continues to get validated compared to that previous resistance and that support. In case we get a little bit of a breakdown, the next support level is going to stay put down to 5,060, aligned with that previous support level as well. That's going to be aligned at that 200, actually that 50 simple moving average on the S&P 500 as well. So 5,200 is where we're at. Lots of consolidation, support level near term at 5,185 down to 5,060 for S&P. Talking about the NASDAQ, so lots of consolidation sideways is where we are, 16,200. And of course, support level is going to stay put at this level at 15,900 for the NASDAQ, kind of aligned with that 50 SMA. And again, we're seeing a lot of consolidation. The negative divergence continues. That's exactly what's going to be making me a little bit more cautious and alert, considering that the upside momentum is now starting to weaken out a little bit. And we're seeing a lot of consolidation at that resistance for both the S&P and the NASDAQ as well. Talking about Apple, so I did our first analysis ever on using our MoneyVest platform and the data that's coming straight from the website on Apple stock. So that's a video that I published earlier today. So make sure that you do check that out. And again, it's just really exciting for what you've been working on for such a long time to finally be able to do that. And of course, analyze companies and stocks using the MoneyVest metrics and using the calculators, understanding the intrinsic value and doing it yourself. And that's what you'll be able to do, is basically use all of our models and calculators to analyze stocks like a pro and really just invest with confidence, and understanding that, you understand all the financial metrics, the key ratios, the valuation, the efficiency, the profitability, the growth, and everything else to know about the company you already do know from a number standpoint, from a qualitative standpoint, using our platform. So again, if you want to get access to the early beta, nothing would make me more happy to get the feedback from you. And of course, at the end of the day, I really want to build something that is functional and usable and valuable to all the members. So if you want to join, link's going to be down below. But coming back to Apple here, 168 is where it's at, basically flat on the day. Resistance and targets back up to 199, still oversold, and a much stronger support is going to be at that second tier. It's going to be sitting roughly in the 150s. That's exactly where my intrinsic value also sits, all the way down to as low as 129, 130. With my more conservative DCF valuation sitting in the 110s for Apple. Talking about Amazon, so Amazon here pushing higher. Resistance is going to stay put at 188, so this right here is going to be that level to keep in mind for Amazon. Support level is going to stay put at 178 down to 159 down to 143 for Amazon. Very nice consistent uptrend of higher highs and higher lows, so it's done incredibly well. But those right there, of course, are going to be some of these support levels to keep in mind for Amazon moving forward. Tesla, on the other hand, recovering well, pushing up over 4.9%, but still has a long way to go because of a significant amount of downside that Tesla's created over the last several years. In fact, I mean, it's still down from its July 2023 high of $294. It's still down over 41%, not to mention the all-time highs at $400. So it still has a long way to go to prove investors that the trend has overall shifted. So right now, of course, oversold, starting to push higher with that bullish divergence, which is good. Huge resistance at 177, all the way up to as much as $204, $205 to as much as this lower high. I will be doing a more separate, more dedicated video on Tesla later today to give you an idea on what levels to keep in mind. Nvidia, on the other hand, down about 1%. Huge support sitting at 844, 845 for Nvidia, with a resistance staying put at 967, 970. And if we do end up, let's say, seeing a breakdown below this number, then the next levels are going to be closer to around 745 to as low as 655 for Nvidia moving forward. We're seeing a lot of consolidation sideways here, But of course, this has been a parabolic run for NVIDIA at the moment. Support level is going to stay put at 845. Advanced Micro Devices coming down to its support at 164. I believe this is actually a much stronger, much better support here, considering how oversold the stock is at the moment, and there's been a lot of institutional liquidation here, as you can see from the L3 banker oscillator. RSI has been coming down, MACD has been coming down, so very strong support here at 164, and below that we're going to be watching closer to 151 for AMD as well. So those right there are going to be some levels, couple levels to watch and keep in mind for AMD as well. Talking a little bit about PayPal, and PayPal also outperforming on the day, pushing up over 1.83%. So if you come over to the 50 SMA as well as the 200 simple moving average, that continues to give us that golden cross that we were looking for from last week. And the again, the 50 SMA stays above the 200 SMA, which again, from a short-term perspective, does represent some upside potential, considering that this is a bullish indicator at the end of the day. Resistance is going to stay put at $68. We need a breakout over $68 for PayPal in order for it to shift the overall direction and start making some higher highs and higher lows. So we'll find out soon enough whether we get a breakout above this level or not. Talking about Visa, and Visa here pushing higher, up 22 basis points from that support of 273. So that right there is going to be that level to keep in mind. Of course, oversold from an RSI, MACD, and again, the L3 banker oscillator standpoint, and resistance is going to stay put all the way up to 286 for Visa as well. So that right there is going to be first level at 290, and of course, another level at 286 to keep in mind for Visa. Talking about Meta platforms, and Meta here down about 1.5%. Not a surprise considering how much it was pushing higher. It was trading pretty much at an all-time high. Support level is going to stay put at 517. Just about a couple dollars below where it's trading at the moment, and all the way down to inside this green rectangle. Very strong area of demand, and of course a massive gap to eventually fill as well for Meta. It's sitting roughly in the 420s and 430s for the company. Talking about Netflix here, and Netflix also consolidating sideways, and resistance is going to stay put right over here at roughly 636. Support level all the way down to 596, 597, kind of aligned with that 200 SMA or 50 SMA. For Netflix, all the way down to this huge gap and the 530 level where Netflix may or may not come down to. But the bottom line is there is some negative divergence that continues. Huge resistance at 636 down to 596, a very important support level aligned with that 50 SMA for Netflix. Talking about Google. And Google here pushing higher very nicely to 156, almost at a new all-time high. That is incredible. And again, this was a huge trade idea that we had, 16-17% rally. And now Google is, again, a little bit more on the overbought side with lots of buyers that have stepped in on this stock here, trading at all-time highs with RSI, MACD, everything pushing higher very, very nicely. And then finally, we've got Microsoft and Enphase, and Microsoft consolidating sideways. For the most part, resistance going to stay put at 430. Support levels kind of aligned with that 50 SMA first at 413 down to as low as this green rectangle in the 390s for Microsoft as well. And then finally, we've got Enphase and Costco. Enphase pushing higher, continues to consolidate sideways for the most part. It's been a little bit more volatile than usual. Support level is going to stay put at $108, and resistance and targets back up to 138 for Enphase as well. And then finally, we got Costco trading pretty much sideways with a support level is going to stay put at 677. And this right here is actually going to be a little bit of a resistance as previous support level turning into a new resistance. And we continue to actually make lower highs for Costco as well. And of course, as well as lower lows for the company. So we're seeing a little bit of a falling wedge pattern for Costco. So hope you all enjoyed this video and a complete update on the markets here. So again, we've got inflation numbers coming out later this week. Earnings season is just getting started, so we got lots to unpack from the markets here. It's going to really start picking up in terms of volume and volatility. So we'll be live to cover all of that. And don't forget, if you want to get early access to the beta launch for the MoneyVest Pro platform, link's going to be down below. This is going to be discounted pricing for a limited time. And after that, once we do the global launch, unfortunately, that pricing is going to go away. So link's going to be down below if you want to join and lock in that pricing forever. As always, happy investing. I'll see you all in the next video.